Hello friends, welcome to GMG Accountancy classes. Today we are going to discuss about sales return book or how to prepare sales return book. First, what is the meaning of sales return? Sales return book is a subsidiary book in which details of return of goods sold for which cash is not immediately paid are recorded. Just as goods may be returned to suppliers, goods may be returned by customers for the following reasons. For example, if you sell something and some defective are there in the goods, you return back to us, that is known as sales returns. So defect in the goods, delay in the dispatch of goods to the customers, oversupply of goods, goods not being in accordance with the samples and specification, violation of the terms of the contract, etc. Goods returned by the customers is known as returns inward. So return inwards is another name of sales returns. This book is not concerned with the return of assets or return of goods for which cash is paid. This book is prepared just like the other day books. In sales return book also, cash paid item must not be returned. Only credit item should be returned. So now you will see illustration 6, page number 149 of your textbook. Enter the following transaction in returns inward book of Magesh, a textile dealer. 2017 April 6. Returned by Shankar 30 shirts, each costing rupees 150 due to inferior quality. Now how to write this? What has been named? The name is given Shankar. So first you have to write 2017 April 6 Shankar. How many shirts? 30 shirts. He returned because of inferior quality. So 30 shirts at the rate of 150. So how to do easy calculation? 15 into 3 how much? 45. Write 45. Then 1020. Write as it is. So 4,500. Now what is the second one? April 8, Amar Tailors returned 10 t-shirts, each costing rupees 100 on account of being not in accordance with their order. So Amar Tailors returned 10 t-shirts at the rate of rupees 100. So next you have to write April 8, Amar Tailors 10 t-shirts at the rate of 100 rupees. Whenever single amount is given, so straight away you have to write in outer column. No need to write in details. In this book they done mistake, but you should not do mistake. That's why I shown this. Straight away you can write the amount in outer column. No need to write in inner column. When you have to write in inner column, when two items are given, then only you have to write in details, so that you can put the total and write in total column. So 1 into 1, 1. 10, 20, 30. So 30 if write it. Likewise, if you do the calculation, then there is no mistake will be happen. Next, April 21. Prema Stores return 12 salwar sets, each costing rupees 200, being not in accordance with the order. So which store? Prema Stores. So first you have to write Prema Store opposite of your date. How many salwar? 12 salwar sets at the rate of 200. So 12 into 2 is how much? 24. Then write 20, 2400. Then all the three items straight away you write in total column. If you add all these three, you will get 7,900. So sales return account is the debit balance. Now how to prepare sales return account ledger? The total of your sales return account is 7,900. Because it is a debit balance, so you have to write the total in debit. 2017 April 30 to sundry debtors account. Sundry means total. So to sundry debtors account 7,900. Then you write the heading Shankar account, the name of a person. Date particulars JF amount. Date particulars JF amount, once again you have to write. DR CR means debit credit. Then you write it is a sales return account. So April 6 by sales return account 4,500. Next Amar Taylor's account 2017 April 8 by sales return account 1,000 rupees. Then Prema Stores April 21 by sales return account 2,400. This is the easiest way to do the ledger. Here return 7,900 debit side, then everything come like this. Everything will become in credit side. The name of person's account will come in the credit sides. You write only sales return account, sales return account, sales return account. Here only you have to write to sundry debtors account. Now you understand this sum? Good. Now we will move on to the another new sum which is very important. Now this is very important. In the half-yearly examination, in the board examination, they will ask in 2 marks or 3 marks. This is the calculation of due date. How to calculate due date? Date of bill up to this, they will give in the question. Date of bill, period of bill, day of grace, they will give in the question. Due date only you have to calculate. Date of bill is given 1st March in the question. Period of bill 2 months. Day of grace 3 days. So 1st March to 2 months is how many? 1st March, then 1st April, 1st May. 1st May is 2 months. 1st May plus 3 days is how much? 4th May. Now see the second one. 12th July, 1 month. 12th July to 1 month is how much? 12th August. 12th August plus 3 days is how much? 15th August. But 15th August is the Independence Day. It's a public holiday. So whenever it is a public holiday, like 15th August or 26th January, then you have to take previous day as the due date. So here 15th August Independence Day is the due date, but you have to write 14th August because 15th August is the holiday, government holiday. Next one, 1st October. 1st October to 30 days. So 1st October 30 days is what? Which date will come? November 30. Then November, how many days are there? November is how many days are there? 30 days. But here, October is how many days? 31 days. So, then November 30 plus 3. So, due date will come 3rd November. So, October is the 1st October. It is not 31st October. This is 1st October. So October month full completed. So October is 30 days only. So October is completed. Then 3 days add. So November 1, 2, 3. So 3rd November is your due date. Check the date whether it is a 1st October or 30th October. Then only you can do the calculation very easily. Now we'll move on to another. Now the another important sum, that is opening entry. In this sum you have to calculate only opening entry. Cash 30,000 given, stock 15,000 given, furniture 3,000 given, sundry creditors 10,000. So opening entry means what? At the end of the accounting year, all nominal accounts are closed, but the business has to be carried on with previous year assets and liabilities. Hence, these accounts are to be brought into the accounts of the current year. Journal entry made in the beginning of the current year with the balance of assets and liabilities of the previous year is opening journal entry. So in this entry, assets accounts are debited. All items of assets items are debited. Liabilities and capital account are credited. So sundry creditors always come in the credit balance. So all these three write in the debit side, then write two sundry creditors account 10,000, add all these three, 30,000 plus 15,000, 45,000 plus 5,000, 50,000 minus this 10,000. 30 plus 15, 45. 45 plus 3, 48,000. 48 minus 10,000, 38,000 is the capital. So two capital account, 38,000 is the balancing figure. So balance of assets and liabilities are brought forward. Now see the important sum, illustration 7, page number 158 of your textbook. Record the following transaction of Vijay Electrical and Company in the purchase book, purchase return book, sales book and sales return book. All the books will come here. 2017 Jan 1 purchase. Purchase or bought means purchase book. Sold means sales book. So purchase will come in the purchase book. What you write in the purchase book? Preeti and Company. Next line, you write 25 tables, 25 table fans are at the rate of 1,400 each. Multiply it, then 10 fans at the rate of 200 each. Multiply it. Both the amount write in the detail column. Whatever the answer come, add auto charges. Only discount will be less. Other all item will be add. Now see the answer. Now purchase book. Preeti and Company 25 tables fans at the rate of 1,400 each. So 25 into 14 you will get 350 and write 2 zeros. So you will get 35,000. Send 10 fans at the rate of 2,000 each. So 1 into 2, 2. Then 1, 2, 3, 4. 4 zeros, 20,000. Likewise, if you do the calculation, then there is no mistake. So 35,000 plus 20,000 is 55,000. Add auto charges. 100 rupees, you will get 55,100. Then See the question. So now see January 5. Sold on credit to Sheila and Company. Sold means sales. So 10 electric iron box at the rate of 1250 each. I'll explain first the full question, then I'll show you the answer. 10 electric iron box at the rate of 1250. So 1 into 125 is 125. Add 20, you'll get 12,500. Write in inner column. Then 20 electric stoves at the rate of 450. That is 9,000 rupees. So 12,500 plus 9,000, you will get 21,500. Less 10% discount, 2,150. So you will get the answer 19,350. Now see the answer so that you can understand. Now see the sales book. January 5, Sheila and Company, 10 electric iron boxes at the rate of 1,250 each, 12,500. Add 9,000, 21,500. Less trade discount 10% each, 2,150. You will get 19,350. Now see the question. January 10, purchase for cash from Brinda and Company, 10 electric stoves at the rate of 1,300 each. So this will come in the purchase book. You have to write Brinda and Company. But what transaction it is? It is a cash transaction. Whenever cash transaction come, you must not write. Only credit transaction you have to write. No cash transaction should be written. Next, date 18, return to Preeti and Company. How do you know this is purchase return or sales return? See the Preeti. Preeti is given. So now, January 10, because it is a cash purchase, so no need to write. January 18, return to Preeti and Company. You have to write in purchase return book. See the purchase return book. Preeti and Company. Preeti and Company, 5 table fans at the rate of 1,400 each. So you will get rupees 7,000. So Preeti and Company, 5 table fans at the rate of 1,400 each. You will get 7,000 rupees. Next, once again, we have to look after the question. Whence, then what is the next one? January 20, purchase from Satya and Company, 10 fans at the rate of 1,200 each, less trade discount 5%. So you have to write in purchase book, 10 into 1,200, 12,000, minus 5%, 600, outer column 11,400. Then you have to write January 21, that is Sheila and Company return 3 electric iron boxes as a defective for which cash is not paid. So this, where you have to write Sheila and Company, where the Sheila came, that has came in January 5, sold to Sheila. So you have to write this Sheila and Company return in sales return book. So 3 electric iron boxes return at the rate of how much? Electric iron boxes cost is rupees 1250. So 3 into 1250 you have to write in sales return book. Then January 23, purchase from Elizabeth and Company 10 water purifiers at the rate of 4,700 each. You have to write in purchase book. Sold on credit, sold means sales book. Bhavani and Company 7 fans at the rate of 1,450 each. You have to write in sales book 10,150, multiply both. Then return to Satya and Company 2 damaged fan for which cash is not received. So when the cash is not received, you have to write where is Satya. See in the question where the Satya is given, on which date the Satya and Company is given. Check where the Satya is given. It is given in the purchase book in January 20. So this is return means purchase return. Now you see the answer of purchase book. Answer, you have to add all these items. All these items you have to add it. 55,100, 11,000, 47,000. So you will get this amount. Then see the sales book. In the sales book, Sheila and Company is 19,350. Bhavani and Company 10,150. Add both, you will get 29,500. So sales account, credit you have to write. Now see here, purchase return book, Preeti and Company 7,000, Satya and Company 2,280. Add both the amount, you will get 9,280. That is purchase return account, CR. Then sales return book. January 21, Sheila and Company 3,375. Why? Because discount is also given, that you have to minus it. So you will get 3,375. That is sales return account debit. Now if you like this video, share, subscribe. Thank you for watching the video.